Hey guys, welcome back to another video by Fully Informed Trade, or Fitrade for short, knowledge for everyone. In this video, I'm just going to go ahead and review the silver and silver mining stocks, gold mining and gold mining stocks. So basically gold, silver, and the mining and the miners. And also, my name is Alex Cho, so yeah, I think I got everything mixed up there earlier, but oh, it doesn't really matter. All right, so let's go ahead and review these markets. Okay, dollar index does have a huge rally upwards, but then it's pulling back now. As you guys can go ahead and see it, we're pulling back. We're starting to form somewhat of a mini pennant pattern right here, and basically, I think the dollar index probably has more room to go to the upside. Remember, I've seen issues, credit rating agencies come out and say some really negative stuff about the bond markets. Every single time I see that happen, I generally see stocks weaken. I see commodities like gold and silver go up, and I see the bond markets tend to have a major pullback. So, and people are asking, well, since the government had a downgrade in debt, all right, so basically the U.S. government's treasuries have been downgraded. Why is it that the dollar is going up instead of down in value? And that's basically because you're going between the lesser of two evils. Right now we have Portuguese debt issues and we have U.S. debt issues. Between the two, which one would be less risky? Obviously the U.S. debt is less risky than Portuguese debt. Therefore, people are weighing the options and saying, okay, I'd much rather be long the dollar than long the euro. So again, people feel the dollar is still safer than the euro, mainly because the two issues examined side by side, the dollar is still considered safer. Alright, so now let's go ahead and review the gold market and silver market. Silver did have a sizable bounce. It is pulling back though because we saw that slight divot in the dollar index. You're seeing it come back in again. Right there. It's going back up. Now silver has that inverse correlation to the dollar, but gold is kind of different. Gold actually likes to go up. As you can see, once you see some negative, get rid of that. Alright. Once you get some negative data concerning bonds, gold is considered the safety area. That's the reason why I had a $1,500 price target. It's only $5 away from hitting it. So again, I think I've met expectations on that. I was thinking 1,500 when we're at 1,440 or something like that. So, you know, it's only a $60 move, but if you're trading futures contracts on gold, that's still a pretty sizable profit right there. But either way, gold continues going higher. It has reached the $1,500 area. As for silver, silver is having a hard time finding strength. If you guys notice, it did go up and make some, you know, it's having issues. I mean, really, it tried making new highs, but then it pulls back. And right now, I'm kind of neutral silver, and I don't want anybody buying into the silver, or I don't want people to be buying ProShares Ultra Silver. I don't want you guys buying First Majestic Silver quite yet. Maybe First Majestic Silver. It's kind of hard to say. It is a growth stock, so that might be the rare exception here. But again, it's hard to say. You know, silver could easily go up tomorrow, but at the same time, you just got to be a little cautious here because silver isn't seen as a third currency. Well, not quite yet, or an alternative to holding on to currency. In fact, it's an industrial metal. And whenever you have industrial use for something, it means that the dollar is constantly traded for the purpose of buying silver. Therefore, when you put it through industrial use, one would have to assume that silver technically should have an inverse correlation to the dollar because we buy it regardless, we don't hoard it. Gold is what we hoard, not silver, not quite yet, not as much as we should be. So again, you know, I think there's some great fundamental reasons behind why silver should continue its upwards trend. But right now, I'm a little cautious on that. I just want you guys to be relatively careful. You know, I reduced my silver exposure on Friday down to around 5% weighting, and the only stock I really held on to was Pan American Silver. It is down by around 2% today. It is holding on to that 50-day moving average, which I do like. But again, you know, it's depending on your risk profile. I mean, I honestly think that If you're investing, you might want to consider these silver mining companies. But if you see a major pullback in the stock market, anywhere from around 5 to 10%, you could easily see silver mining companies drop by an added 10 to 20%, regardless of whether or not silver goes up or down in value. Now, another thing that does interest me, though, is this. As for the silver spot is concerned, remember that call I made around April 26th, 27th, the Federal Reserve meeting? I don't think the Federal Reserve is going to raise interest rates, and I also don't think that they're going to raise capital reserve requirements or increase the or end permanent open market operations. I don't think that's going to come to an end. And the main reason why it's not going to come to an end is because of this whole entire bond rate downgrade, S&P downgrade in the bond market. They're going to use that as an excuse. Another thing that's going to happen is that because of that, they're going to say, oh, and also the stock market is having a major pullback. Therefore, one should not they should not do anything to cause instability. So again, that's why I think the Federal Reserve meeting isn't that much of a concern right now. I still think you guys should hold on to silver and gold, the commodity, but I wouldn't be holding on to silver or gold mining stocks. That's just what I think right now at this moment. If you're holding on to physical silver and gold, I just keep on holding on to it. If you're trading silver and gold on the futures or Forex exchange, I would still have an upside bias, but I'd be very cautious. I'd be looking for short-term trades that have a high probability of succeeding. Right now, you don't really have that high probability thing working for you on silver, but on gold, I definitely do see it there. I think gold could continue to go higher if stocks continue to go lower, which they possibly could, because remember, we saw the same exact thing happen in Europe last year. That caused stocks to drop, and this time I think stocks will drop on that. And of course, we're nearing, earnings season is pretty much going to come to an end sometime towards the beginning of May. And remember, the favorite Wall Street to dodge: sell in May, go away. Don't buy silver mining stocks in May. Don't buy gold mining stocks in May, but you do want to hold on to gold. And silver, I would reduce my exposure to silver and just buy gold at this point if you're a trader. If you're a long-term buy and holder, you just hold on to the silver and gold, because I don't think that Federal Reserve meeting will have an immediate impact as of right now. I think it will happen later on, sometime in June and July. But if stocks continue to be weak throughout June, July, August, the Federal Reserve may even go as far as extending permanent open market operations. So again, I just want you guys to know all of that in advance. The end thesis is pretty much avoid copper mining companies like Freeport-McMoRan. Alright, so Freeport-McMoRan has continued their downward trend. Avoid silver stocks for now. I don't want you guys buying into silver companies unless if you guys have the guts to hold on to a falling knife if it actually happens, which I don't think you guys have the guts to do it. In fact, I would just use a trailing stop. ProShares Ultra Silver, again, I do kind of like it, but again, it's not real silver. It's a silver stock. Don't buy silver stocks in front of a stock market pullback. It doesn't matter whether it's an ETF or not. You guys should have physical silver if you guys want to weather a downwards movement in stocks. Okay, gold and Pan American Silver. Pan American Silver is hard to say. Again, it is having a major pullback. It is touching that $36 area. I might just sell Pan American Silver and come back into it later on, maybe at around 33 or even lower at around 30, 31. In fact, since the stock markets are falling, I generally don't like to short silver and gold combining companies, even though they will drop, because I see better alternative than other places. That's why I'm not shorting silver or gold stocks, or ETFs for that matter. But again, I still think that silver and gold, the physical commodities, are probably going to be better. If you don't want to hold on to physical commodities, I would hold on to the ticker symbol GLD, SLV, and just ride the silver and gold up a little more. I don't think the Federal Reserve is going to raise interest rates, therefore silver and gold should be able to continue going higher. Okay, so, alright, 2 key points here. Fed is not going to raise interest rates based on what's going on. Silver and gold, the commodities are okay, even if you just buy the SLV, GLD. Don't buy any mining stocks. Alright? Simple as that. Anyway, take care, folks, and I will have more for you guys in the coming weeks and months ahead. If you guys are interested in this, in these videos, be sure to subscribe. I will have more for you guys on a regular basis, as like I said earlier, months and weeks ahead. And also, if you guys are interested in using this charting software, just check out the link right below this video. Anyway, take care, guys. I'll see you soon.